What's going on, guys? Just give me a second here. Guys, I'm going to start up at 7:05. So just give me a few seconds. I'm trying to figure out the thumbnail. Alrighty. Good morning. Good morning, good morning, good morning. I'm going to just go ahead and get the link here posted to. I'm going to get the link posted to my Instagram story just to get it up there. Mm-hmm. Good morning. Good morning, bro. Early start for me, but I have been wanting to do this for quite some time now. Um, to get some, some pre-market action here. Get some pre-market action. So I know a lot of people aren't going to be up by the time I am up for the session. So we'll see. But I am copy trading 5 Apex accounts today. Oh, I just realized you guys can't even see the screen. I'm gonna go ahead and move this. Hopefully that's not annoying. Maybe I can put it up here. I don't know. I'll blank that out for now. Actually, we'll leave it at the top right. I think that's fine. Morning, bro. Morning, bro. Yeah, it is an early start. Yup. But we're gonna go ahead. We are gonna get started up here. We're gonna be taking a look at pre-market from now on. As a lot of you guys know, I am, an ICT guy at heart. So it's always super important to just gonna make sure I'm reconnecting all of these. Also, can you guys just let me know you guys can hear me just fine? I just want to make sure that you guys can hear me. Like audio sounds good. Everything on the screen looks good, right? Quality's good. Okay, perfect, perfect, perfect. Mm-hmm. I don't know if any of you guys check, but some people hate the order flow videos that I post when I'm shitting on order flow, bro. It's fucking hilarious. People get so pissed off. Okay, I just want to bring this to the other side because I have 2 monitors right now. I bring this up. Okay, nice. So, all right. Now looking at the daily chart here, you sort of just have to assume that we're going to be going to all-time highs. I mean, there really isn't anything like logical to frame lower prices. Unfortunately, that's just where we are at in terms of like current price action. So I'm not going to be too subscribed to seeing lower prices on a longer term basis, though, right? We can see lower prices, on a session or hourly basis. We still have that new week opening gap. I'm outlining this buy side liquidity pool as like a potential pertinent liquidity pool that price may want to continue to draw up into. We're taking a look at that 15-minute. We still have the new week opening gap, and we also have some relative equal lows right down here. Also, by the way, guys, once I start like analyzing price action, I get into trading. I don't look at the chat. So if you guys are saying anything in the chat, I'm not really taking a look at it. But I like this sell side liquidity pool, even though these aren't like super high quality relative equal lows, because I'm pretty sure that this low is lower than this one. You can actually see that it's engineered nicely right above the current new week opening gap, which is definitely something you want to see. We've also swept out previous week high here, so just something to keep note of. Of course, you expect that to happen when we're bullish. I'm curious to see if we want to utilize that external range liquidity to send us lower into sell side. We'll, of course, be noting that. Take a look at the 5-minute chart. You can see price swept out the relative equal highs here. Mm, mm, mm. I like this down here. So if the new week opening gap is our draw, meaning that we're expecting for price to keep working lower until it gets to that new week opening gap, what can we reasonably discern will happen? If this is our draw, then we can expect targets along the way to get taken or to get hit. Mm, 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 mm. And remember, guys, Um, nothing I do here is by any means a copy trading service. This is all done by me. All the executions are done by me. No one else. Okay? So I just want to put it out there. So I already know I'm gonna get a lot of questions asked, like why I have been looking at the pre-market session, why I plan on trading the pre-market session more often here. Now, just to keep it relatively short, to keep that answer relatively short, um, I find price action during pre-market session easy to read. It's just plain and simple. And as someone who has gone through all of ICT's content, and especially now gaining a ton of experience with ICT stuff, a lot of the fluctuations that occur during the pre-market session they're like real easy reads. They're real easy reads in my opinion. And the best part about it is too is that because the pre-market session is of course the session right before the market open, there's going to be lower volatility. So you're going to get the same type of price action you would get for all of New York AM, but you're also getting the same volatility that you would see during, London or Asia session. A little bit more than Asia session, of course, but it's just a lot easier to read. And lots of times the pre-market session is sort of like a setup for the New York AM after the opening bell. And lots of times it's easier to tell where price wants to head. So just something nice. And it's something that I want to start taking into consideration now, especially now more than ever, because I would really like to get my trading done earlier in the day. That would be perfect. Once we clear out all of these lows, I am going to go break even. Gotta save that as a new template. Also, during pre-market, you get like these really nice like thin price runs that just really move. And these are like the type of moves that I always want to be in, right? The ones that just like move and they're one directional, not price moves that, stall out. Like I hate how New York AM, especially after the open, has been delivering as of recently. And, it's just something that we have to bear in mind when we are trading. Also, I have a question. Actually, I am going to open up the chat for this. Do you guys, I know this is kind of like a stupid question, but do you guys like if I were to like do something like this, like have this overlay, like just to show you guys like the position I'm looking for? I know it might be kind of like a stupid question, but I see so many people do it. I'm just not too sure if it's something so actually now that I'm break even, I'll take a look at the chat. Um yeah, I was gonna say I prefer it without as well. Okay. I just wanted to get your guys' opinion. Very recent week, PA on New York game so ass when I try to catch a trade in Asia. One is better for me. Yeah, I mean, I'm not much of an Asia session trader, and I'll be 100% honest. I think that a lot of people, I think everyone really shouldn't get used to trading Asia session like that because I gotta turn on the magnet. Because historically speaking, or at least like when I first started learning, like Asia session was never that good. So, um, I'm assuming that will always be the case. But I mean, I trade it here and there. Like if I'm really desperate to like pass an account quickly, I'll do that. And explain suspension block. Suspension block is just a fair value gap with two volume imbalances on each side. So, like a good example of a suspension block would be this. This right here. This would be a suspension block. Do you see how this right here would be considered a fair value gap? And then, of course, ICT teaches to encapsulate the volume imbalances. But when you have the situation where there are volume imbalances on both sides, then this is your valid suspension block. And also think about it logically, right? This is a fair value gap that's suspended in price action by two volume imbalances. It's like literally suspended. That's like the best way to think about it, right? So it is literally suspended in the air, quote unquote. And that's exactly what we get right here. And that is your suspension block. As far as like its use, like a lot of people ask, like, oh, is there something different about it? Like, no, there's nothing different about it at all, right? It's just it is literally the same. It's the same. You treat it the same as any other fair value gap. It's just a fair value gap variant. I'd like to get a close. If we can get a close beneath this, I don't want to see a stall out here because we have this right here. We have all this down close candle range. These are the indicators that I use. It's so funny. Like I can't believe people actually ask me like what indicator. These indicators, they're just indicators just to plot shit that I don't really feel like plotting. Okay, so we're on the 1 minute. Let's take a look at what the 2 minute looks like. 2 minute looks exceptionally bearish. We saw speed through here, nice close. That's definitely a market structure shift. I'd want to see this left open, obviously, because we've expanded aggressively so far. Let's take a look at the 3 minute. 3 minute is telling us the same story. We also we haven't seen a close. Oh no, we have seen a close beneath this fair value gap range, so that's pretty nice. Take a look at the 4 minute. 4 minute looks like it's supporting the idea. We do have a 4 minute SIBI right here, so we could see price want to trade back up into there. In a perfect world, it's just one thin price run where we just keep on expanding lower. If we take a look at the 5 minute here, 5 minute looks exceptionally bearish as well. You know, like I said, we can see some type of retracement, but ultimately we should just not go back to break even if this idea does want to play out. No problem. No problem, bro. Does the 2024 mentorship get in depth with pre-market session? Yeah, I mean that's where he starts talking about it a bit. I mean, it's not like it's hard to explain. The pre-market session isn't really all that difficult, honestly. But yeah, that is where he starts to kind of open the book as far as that's concerned. Um, he sort of, I mean, he sort of already introduced. Or wait, I don't know what episode you're on, um, Lubo, because I know that he like in one of his like I think it's got to be in like one of his first 10 lectures. In one of his first 10 lectures, he says or he talks about like the idea of utilizing new week and new day opening gaps as a way to frame bias and narrative, and also like you would want to see, like, remember he talks about like first 30 minutes after 7 a.m. you want to see relative equal lows engineered, and then the next 30 minutes you want to see price taking those relative equal lows. Like that's sort of like pre-market. um how to find drawn liquidity every day before New York session opens. I mean, that's sort of a hard question to answer because it's not as plain and simple as like, oh, you just do this and that. It really depends on where we are at in terms of price action on the charts. It depends on what we're predisposed to do on the daily chart, right? I would say my biggest piece of advice to most people would be to make sure that you have some type of idea of what you're looking for on a daily chart. If you can get a good idea of what price is likely to do next on a daily, then chances are you will have an easier time reading price action on a lower time frame chart because um, I'll tell you, man, it's not like it's most people think that you can just go into price action without like any sort of bearing on the higher time frame and just sort of read price action, right? And they think that by outlining like certain draws on liquidity that it's somehow going to give them all of the narrative they need. That's not all the story is, right? That's not all it is. There's so much more to it, which is why I urge people to take note of what we're doing on a higher time frame basis. So my answer to your question would be we have to have some type of bearing on a higher time frame basis to kind of validate whatever your draw on liquidity is. So like for instance, a new week opening gap can be considered a higher time frame level. So I'll give you that. But let's just say that we didn't have the new week opening gap as our draw. And let's say that my expectations on a daily chart were I was expecting higher prices. Well, what I would do is I would wait for sell side liquidity pools to be taken to set up long positions to go into buy side liquidity pools, right? That's what I would look for. And I think that that's kind of like the best way to phrase it. Um, I've seen people mark new day opening gap with 414. Is there a difference? Yeah, there is a difference. One of the new day opening gap, like a new day opening gap that's outlined by the 4:14 p.m. closing price and the 6 p.m. opening price, that's your regular trading hours new day opening gap. And then the new day opening gap that's outlined by just the close at 4:59 and the what's it called? The opening price at 6 p.m. That is your electronic trading hours new day opening gap. Pretty nice reaction off that. It didn't exactly. Gonna go ahead and just draw that out right there. We want to see a follow through with this candle. Want to see if we can get beneath all of this up close price action. I'm not a fan of how we like stalled out right here, but we still have those relative equal lows. I just don't want a situation where we come up, tag break even, and then roll lower. We are inside of that 5 minute civvy, so we would need to see. I mean, we wouldn't need to see, but it would be preferable to see this entire candle kind of engulf this previous up close candle. That would be perfect. Let's take a look at what ES is doing. So ES got below this fair value gap right here. We did also have a purge on buy side. Just trying to get a read here. YM's just doing whatever. We absolutely need to see this order block keep price beneath it. We can sit here and accumulate for an hour long. That's fine, just as long as we stay beneath this order block, because then that tells me we're bearish. Because we also have this candle right here, which is like our 7 a.m. candle. Not that that really has any bearing, but let me actually go to a 30-second chart. Let me go to a 15-second just to see where price may be stalling out here. I just don't like how we're finding resistance or support here, but it's okay. Is that an indicator for? No, I don't. The indicators that I have new week opening gap and new day opening gap indicator by Foddy. Just plots the new day, new week opening gaps for me, especially on my trading chart because I like to keep my trading charts clean, and obviously having all the new week and new day opening gaps on your chart at the same time as your trading can be a little messy. This right here is a regular trading hours opening range gap indicator. This is actually one that I created, but I just created it with Claude. I can definitely put that in the resource library in the Discord. And then also ICT Fractals, which is another one that I created. It's another real simple indicator. Just plots the fractals of what I'm looking at. So I'm looking at the 1 minute, which this is plotting the 5 minute, the 15 minute, the 1 hour. So it's just like a um, pretty cool little feature. Actually, didn't even notice this. We got a 1 hour BISI down here. It's okay. see. Hey man, if anyone is like your content on here, first time seeing your YouTube. Nice, bro. Nice, nice, nice. What I'm struggling with is I know the direction but getting the entry. Well, then that just tells me that you just need to be a little bit more patient, right? I mean, if you know the direction right now, in getting on side of the direction is the easy part. Like maybe when you say your entry, maybe it's like waiting for certain signatures to occur, waiting for price to do enough in order to, work lower, right? Like that's just something that you have to kind of learn through with experience. Unfortunately, there's no easy way to kind of avoid that problem. You're just going to naturally encounter that. Is your bias long today? On a higher time frame basis, I am expecting higher prices. Yes. Hey, ICT also said before FOMC we should not trade it. Well, this isn't the FOMC he's talking about. He talks about the FOMC rate announcement. What we have at 2 p.m. on Wednesday is FOMC meeting minutes. That's just it's just like a meeting, stupid meeting. I don't like how prices back up into this range like that. I really want to see this thing just like fucking peel lower. Um, just rebalancing the 5 minute FEG? Maybe. I have no idea. Yeah, I mean, we're inside this 5 minute FEG, but we need to start seeing expansion. I just don't like how price keeps on tapping the high, the upper half of this inversion, and it keeps on bouncing off of it. That's not what I want to see. I don't want to see that. If we're bearish, we have to get through the consequent encroachment and utilize it as an inversion level. I'm going to go ahead and actually draw out the eighths here. Let's retrace. Let's retrace to 0.5 level of the range. Yeah, I mean, I don't really. Yeah, it's whatever. Um, in your recent breakdown, you mentioned you mainly use the 5 minute time frame alongside the 1 minute. How do you use 5 minute in your trading? Well, um, I don't really have like an A to B process like that. The way I do things is I like to place my focus on, really, to be honest with you, most of my analysis comes from the daily chart and the 1 minute. And the way I do it is, as long as I have a good idea of what we want to do in a daily chart, meaning like, do we have a fair value gap that we want to rebalance? Do we have a liquidity pool that we want to take? Have we just traded into a higher time frame PDRA, and do we want to start expanding higher or lower? Based off of those certain factors, I'll utilize that pairing to correctly explain what I'm expecting on a higher time or on a lower time frame basis. So like on a 1 minute chart, so the way I'll use a 5 minute chart is I'll just use a 5 minute chart to identify clean levels in price action that I want to use as targets. And I'll also use a 5 minute chart to sort of like find supporting details in a trade that I'm in. So for instance, I happen to be in shorts right now because we swept out buy side. This is going to be a super hard range to get out of. We've already swept out relative equal highs. We've swept out previous week highs. And now we turn this into an inversion, right? We turn this into an inversion level. That's also the first presented fair value gap after 7 a.m. Price rotates lower, going short off that, break even beneath these lows, and now we're stalling out. But basically, the idea is I'm using this 5 minute chart to help me frame the idea of going lower because we have this 5 minute SIBI, we have these down close candles, which should resist price from going higher. So that's how I would use a 5 minute chart. I don't really have like a specific way that I use it, right? It's just to kind of help support my already existing idea. No, I don't only use the first presented fair value gap. The first presented fair value gap is just a really nice tool that I like to key up on, especially during the New York AM session, because I have a lot of work um, around the first presented, but nothing too crazy, nothing too insanely worth noting. Um, yeah, like how far the price is going to retrace, and I want to align it with my stop loss too. And you really got to be patient, but sometimes if I wait more, I miss the entry, so it requires experience. Yeah, I mean, at that point, like if you're hesitant on your entry, then that just tells me that you're probably risked a little too heavily. So I don't really know what your risk looks like. I don't really know how you're trading or like what your process looks like, but you just got to make sure that you're not scared trading, right? You can't trade scared because that's definitely a sure way to make sure you never get to where you want to be. Are you trading the open today? I mean, if nothing happens, like if I get stopped out at break even and I don't really find anything else that I like for the rest of the pre-market session, then I'll probably be on here till open or like till like the 30 minutes before the open. Brother, I answered your question already. I'm on. I told you. I said that this is not the FOMC that ICT talks about. It's the FOMC that's just like it's just a meeting with just like a bunch of old snobby guys that and they release like a quick little report. Um, it's FOMC. It doesn't really do anything. Thank you, brother. Thank you. Oh, I mean, if your question is like in regards to like it being a no news Monday, well, ICT teaches that the pre-market session is always the session you want to trade if you're expecting the open to be shit, which is also another key detail as to why I'm trading pre-market. So basically, if we're looking to trade pre-market session, there's got to be good reason, and that good reason is that we're expecting the 9:30 a.m. open and after to be shit, and that's what I'm expecting, right? So I'm expecting like pre-market to offer like easy to read type moves, and it just delivers, and then I'm also expecting for the open afterwards to not be the greatest. I like the down close candle that we had here. I just want to see a follow through of that, and hopefully that's just not like a manipulation beneath the lows because this is like a 30-minute power of three. Hopefully it's a, open high and then low close instead of an open low high close. But we just have to get past this upper half of this inversion, guys. That's really my that's like the level that I'm keying up on. That's like this is like the level that's going to make or break it. If we're going to do anything, we're going to deliver out of this inversion. I mean, out of this BISI, and we're going to see it skyrocket higher, or we're just going to clear right through it. um, yeah, use tight stop losses. Yeah, you got to make sure. I mean, I don't like I said, I don't. I have no idea how you're trading, so it's hard for me to give guidance. But if you know that you're using tight stop losses, just make sure that the trades that you're taking are actually valid ideas and you're not just trying to chase the money. Because having a tight stop loss that tells me that you're just scared of losing the money, which could be, you know, very impactful to your trading. Do you always take max payout? What's your take on taking payouts when you can versus building a buffer, then take a max payout? So normally the way I do it is I like to keep my accounts, but regardless, I always take max payouts, but I also make enough so that when I take a max payout, it doesn't really do anything as far as like affecting my balance is concerned. Now, historically speaking, I always traded on Lucid Pros. And obviously, the way Lucid Pros work is that you have to build that 2100 buffer in order to take a payout in the first place. So even if I did take a max payout of 2000 or 2500, my my maximum loss limit, I always had $2,100 to work with regardless. But I personally think that like here's what I like to say. And it really depends on what type of accounts you're trading and how you're handling them because they're different. Like with flex accounts, like with flex style accounts, right? Or like the type of accounts that I'm on right now, which are the Apex accounts. What I'll probably look to do is I'll look to get just that like one big massive winning day and I'll look to stack up like multiple, winning days after that of really small wins. And if I can do that, I'll pretty much take whatever the payout is at that time, regardless if it's max or not. I personally think you should be shooting for max payout because it's really not that hard, right? I mean, I don't know. I know like a lot of some people struggle and some people haven't even gotten their first payout. So I don't want to sit here and make it sound like it's an easy thing to do, but I suggest aiming for max payout all the time because I look at the prop firm game as sort of like an ROI type of thing. So why would you want to kind of limit your profits? And remember, if you don't take that max payout, that's assuming that you don't even have a big buffer in the first place. So if you don't take that max payout and you're just looking to take the payout right away, then chances are you're really yearning for the money, which is not a great thing for your trading. How do you know the New York game is gonna be shit? Well, I don't know for certain that it's gonna be shit, right? Like, we could end up delivering the most beautiful move today, and that would suck. But at the start of the day, what I do is, or at the start of the week, I discern what days are less likely to be in my favor. And ICT teaches, and of course, I can just tell you this just based off of pure historical data that I've gained by myself, that no news Mondays are just going to be less likely to deliver in your favor. And, knowing that price action is going to be less likely to deliver in your favor on a no news Monday after the open, that is more than enough reason for me to be okay with looking at the pre-market session and potentially taking something that I think is good. Um, but you're never ever going to know for certain if price action is going to be shit, right? You're never ever going to know for certain. But part of what we do as traders is we try our best to minimize the amount of risk that we have exposed into the marketplace, and the way we do that is by identifying days that are likely to be bad, right? So, like for instance, like I said, no news Mondays, they are typically bad. If they're typically bad, why would you want to put yourself in front of the charts, right? You wouldn't. Bro, if you feel like you know enough about dealing ranges, you should make a video about. I know right now you got one marked out, but it's definitely something we struggle. Yeah, I mean, I can definitely talk about it. I can definitely talk about it. The idea of dealing ranges, I think, in my opinion, it's pretty easy. But I can definitely talk about it. I have a lot of topics that I got to go over for the YouTube. A lot of you guys gave me suggestions in the Discord, so definitely gonna keep updated with that. Yeah, also, I face difficulty with overtrading. Like, I do take good trades, but that one day when I take SL, got control, do a bunch of shit. Yeah, I mean, listen, man, that's the same song and dance that everyone sings and moves to, bro. Unfortunately, like, listen, this is my opinion as far as like giving advice with psychology is concerned. A lot of people, right? A lot of people love making like these psychology videos. And listen, some of them are really good. And for the viewer, it's always decent, just to get an idea of like what you're going through and that things do get better. But at the end of the day, if you're dealing with a purely psychological problem, like if you're dealing with a purely psychological issue, I recommend that you stop watching videos in regards to psychology, because it's like the best, it's like the worst form of cope, if you will. Like, watching psychology videos is not going to make your psychology better, right? And we should know this based off logic, but of course, like, we when things get desperate, it's hard to sit there and say like, oh, like, okay, like things are gonna get better, I just gotta focus up. But really, at the end of the day, like, you just have to focus up, and you just gotta focus on what is important to you, with your own system, your own trading style. Like, I wish I can give you better advice, but at the end of the day, it really is up to you, and it's up to how bad you want it, right? If you really want it that bad, you're going to lock in, and you're going to make sure that you don't make those same stupid mistakes. Yeah, I use like, yeah, I use like 10 to 25 point stop loss, which requires perfect timing. I am doing well with it, to be honest. I pass an account with my well. Then nice. Yeah, you just keep doing it. How do you trail your stop loss while having 10 to 15 micro contracts? Well, that's like, that's a hard question to answer, because it really depends on market structure. Like, for instance, the way I like to look at my stop loss is I like to look at my stop loss as, an area of price action where if we were to go back to that area, then the idea is probably invalid. So, for instance, I was going short off of this inversion fair value gap. I have my stop loss right above here. The idea is that if price gets all the way back up and it sweeps out that high, chances are my idea was wrong. Maybe it just wanted a resweep, or maybe it wants to go to higher prices. Who knows? Now, the idea is once we broke beneath these lows, if we get all the way back up, if we are able to retrace all of this range and we are able to get back up here, mind you, getting through all of this price action, which is going to be hard to get through, then that means that I was just wrong, or I could be wrong about the idea, and that price wants to make a higher high. So that's how I trail my stop loss. I mean, of course, it relies heavily on like market structure, like what you're looking at, but I really just look to trail my stop loss in areas of price action where if we get up to that area, then chances are the idea is probably wrong or invalid, or we're getting ready to reverse. Could have taken $1,000 payout on my Lucid Flex funded. Now I'm close to blowing it because I was chasing that max payout. And I would have tilted, but it sucks. Always take it. Yeah. So I mean, if it's your first payout, I definitely like Lugo said, it's definitely a good idea to take your first payout whenever you can, just to get proof of concept. But something that you need to keep note of, if you blew your account because you were chasing that max payout, it's not like, think about it like this. That right there was sort of a that was like a rookie mistake. Like, I can guarantee you, if I sat down and I asked you, like, what did your trades look like when you got to that potentially $1,000 payout, right? And then what did your trades look like once you were trying to get to that max payout? You just lost the process. That's really all it was. And now you kind of have to sit with that. Unfortunately, this position does look like it will get stopped out at break even, which is okay. YM is working lower to those relative equal lows, so okay. Approaching the macro time. The only thing that I'm worried about for this specific setup is if we come back up here, we trade back into this inversion, we tap that 5 minute order block, which is right here, that 5 minute order block, and then we rotate lower. That would be pretty brutal. That would be brutal. Do you have a limit on how many trades you take per day? Yeah, I usually will only allow myself to take two per day. But it also really depends on like conditions. I mean, I'll give myself the freedom to take a third, depending on like for instance, like let's just say this first trade ends up being break even, and then I end up taking a really small loss for my next trade. The idea would be that I'd probably end up looking for maybe one more type of winner that just recoups the loss plus a little bit more. So like, really small, a small winner, maybe less leverage. But For completeness sake and for simplicity's sake, I like to only trade. Um, I like to only trade once or twice per day. Guys, is my mic volume actually low? Yeah, my here it's probably just like I don't know, maybe the environment you're in or whatever, but my mic volume showing pretty fine over here on my end. So see what's going on. I will be right back. I'm gonna go get myself some water. Wouldn't be surprised if when I come back this is stopped out at break even. I mean, we're inside the macro, so but I think on a 5 minute basis we closed above the consequent encroachment, which is not what you want to see. I could 100% see us trading right up to the opening price of this and then rolling lower, which would suck. But I already have my stop break even and I want to mitigate my risk. But I'll be right back. Be right back. What's up? I am back. This little reaction that we had there off that 950 1010 macro. Seems like price traded right up to here and then just moved lower, which is really nice. We get beneath this low right here. I'll move my stop loss to the high. So this is definitely some stop loss trailing logic for those of you who do want to know a little bit more about it. So the idea is simple, right? If we get beneath, I'm going to turn this to quadrant so it makes it less messy. The idea is like this, right? If we get beneath this low, that sets a new range or a new leg, right? So, like, think about it. This is the current leg that we're in. Okay, we just traded up into the equilibrium of it, and then we're working lower. If we can get beneath this low, then this will set a new range, a new leg, and the idea should be this. Price should not revisit the high of that range if we're still bearish. If we are truly bearish and it ends up setting a new range, the new range should be like this, right? So, like, let's just say here's the high of that range, and then let's just say, like, the lowest low ends up becoming this range. If we do retrace back up or we start working higher, if we are actually bearish, we should only work up to equilibrium, OTE at most, and then work lower. recently got I recently got funded, and now that I am funded, I take trades on pre-market, which I never did before. Has this happened to any of you guys? Well, that's definitely not good. That is definitely not good because that tells me that you're probably eager. You're probably chomping at the bit to get into the marketplace so that you can get closer to that winning day. Definitely be careful, right? Even if you are winning, okay, even if you are winning and you're making it work, just don't allow your greed to make the decisions for you, right? It's fine that you're trading the pre-market, but it has to be based off of like a logic thing. Like you're telling me that, you're saying that you've only ever done it during the funded stage. That's not good, right? That's not good. Last question: how would you deal with not accepting losing or just let stop loss go? This is what I'm struggling with most. Well, like I said to the last guy, unfortunately, there's no easy answer to it. There's no easy answer to it. I wish that I could give you, a step by step process to follow that, tells you here's what you need to do if this and that. Unfortunately, bro, it's really up to how bad you want it. It really is up to how bad you want it. And I know that sucks to hear and I know that sucks to say, but if you really, really want it that bad, bro, you're going to make it work. You're going to make it work and you're going to listen to your rules and you're going to make sure that you don't go until. Okay, that also tells me too that you're probably, you're really connected to the money. If you're really connected to the money, that's going to keep you under. That's going to keep you under. You're never ever going to learn, right? If you are constantly worried about the price tag on your trading day or the P&L, meaning that every time you take a loss it feels like it's a like an insult to you, like it's a stab in your chest, you have to make sure that you quench that desire to place another trade. And dude, if you just do it for like 1 week, if you just try just 1 week where after you take a loss you just genuinely close your charts and you don't look at it and you say fuck this, I'm moving on, you can just do that for 1 week, I promise you will never ever want to overtrade again. It becomes easy like that. You just never want to overtrade again. um I've heard that if you use the method of taking huge risk on the first day then stack 150 days you'll get moved live. Well, yeah, but your goal shouldn't be getting moved to live. In my opinion, especially with prop firms, I think getting moved to live is like the worst fucking thing ever. I'll usually just blow the accounts purposely. If I ever do get to that stage, which like most of the time I usually get like 2 or 3 payouts on a single account and then it gets blown anyways. But I have had situations where I've gotten 4 payouts and technically speaking, I would have been moved to live, but I just fucking blow them. I mean that's in my opinion, it's not a good thing to be moved to live. But I would say as far as like, sorry, I'm gonna trail my stop just to that swing high right there because now we just breached out that low. So I'd like to see us continue lower here. These relative equal lows look real nice down here, so definitely a nice little target. Um, but sorry, I deviated. Yeah, you definitely shouldn't be looking to get moved to live. However, that method of like taking huge risk, not on your first day. The way I like to look at it is you look you go into every single trading day. And mind you, this is only for flex style accounts. Okay. So like for instance, The Lucid Flex or the Funded Next Flex, right? Those are like flex style accounts where you have no consistency rule in the funded stage and you have a minimum of 5 trading days and you have to have a minimum profit of 150 per day. If you're trading on those accounts, the idea should be that you look to take $150 or like $200 or $500 wins every day. And then that one day during the week where you just know the setup and conditions are just A plus plus. You use the same amount of leverage, or maybe you go, maybe you use a little bit more, a little bit less, whatever, and you target for like a huge run. So like for instance, like sort of the methodology that I'm using now is once I'm funded, right, I'll be looking to every single day take small $500 winners, right, with one mini small $500 winners. As you saw, like this moved like $500, like now we're back $500, like real easy moves, right? And you get that $500 winning day, and that's if like the conditions are like A or B plus. And then if you trade the next day and it's only A or B plus, you look for the same $500 scalp. But if it ends up being like if I hop on and it's like a Wednesday and it's we got a lot of news and the markets are moving, volatility's high and conditions are amazing and it's so clear where we want to go, then I'll maybe leverage a little bit higher, or instead of looking for just like like a 40 40 or 60 handle move, I'll look for a 150 handle or 200 handle move, because a lot of my moves that I look for, I can forecast or catch 200 points, something like that. Let's see here, I got a lot of questions. Sorry, I'm trying to answer them as much as possible. Um, yeah, it's definitely an overconfidence and greed issue, but I still take setups based on my model. So it's like, so I mean, listen, if you're taking setups based off of your model, then that's 100% fine, right? That's 100% fine. For last many weeks, I lose money on Mondays, especially on news Monday, and that's why I will only tape read. Good, that's perfect. Good that you identified that. Yeah, I'm really connected to the money, but gonna try my best for a month or two, getting there slowly. Listen, dude, you could those your psychology issues, they can be changed in a day. They can be changed in a day, but it really is dependent on you, right? It depends on you and how you are as a person and a trader, because that will determine whether or not you're really gonna make it. Nobody can help anyone. Psychology minds are different. We all work differently. We're all one of one. Something that may work for one person. So yeah, exactly. I agree. I agree. Yeah, it's really really hard to just give. It's hard to give a blanket advice to people in regards to their psychology, because everyone deals with their own problems. Everyone was raised differently, right? A lot of people have their own problems that they deal with internally, which heavily influence the way that they look at money or the way that they look at the charts. Yeah, I've heard that lucid and tradified lives are great, but like the way I look at it is sort of like this, right? If you are getting moved to live, you might as like the way I look at it is, if you're getting moved to live, or if you are looking to get moved to live, why wouldn't you just open up a live account with your own payouts, right? Because at the end of the day, I mean, when you get moved to live, it technically is your own payout. So, and it's just like you might as well open up your own live account under your own brokerage, under your own name, right? Without having to have, some risk management team breathing down your neck. That's the way I look at it, right? It's just like I don't really see the benefit, trading on a live account with a firm. It just makes no sense. But I have heard that Tradeify and Lucid's lives are better. So you risk 500K on your 50K or what? It depends. It depends, like trade to trade. Like for instance, this specific setup that I just took right here, right? I'm on a 50K. I'm on 550K accounts right now with Apex. So my risk for this was only 265, right? And that's only because the volatility is really low. And I know what I'm looking for. I really like this target. It's really clear to me. So that's like pretty much like the whole idea behind the trade setup. So my risk, it was only 200. But most days, like to be honest with you, listen, and I know that this isn't the advice. This isn't like the advice. I don't like giving this advice. to newer people. I don't like telling like newer traders like this type of stuff. Not saying that you are a new trader whatsoever, but the way I look at fundeds, bro, to be honest with you, I could really give a fuck less if I blow 20 of them today, right? I'm more than willing to handle the expenses, and I look at it as a return on investment type of thing. So I know what I'm getting versus what I'm not getting out of days and whatnot. So if I like, for instance, basically what I'm trying to get to, if I risk 1,000 points, 1,000 points, $1,000 on a trade, or like the trade requires me to risk $1,000 in order for me to get the winning day that I'm looking for, then I'll do it. Um, yeah, there we go. There's that winning day. Um, that's why I like trading pre-market. Nice little winning day. $1,000 across all my accounts. Um, nice expansion. I'll stay on here for just a little bit longer for you guys. Good morning, ICT King. We've been trading for 7 months now. I've been trading for 7. I'm able to get to funded stage and get to 1 to 2 days away from Pat. Just wanted to see what top 3 concepts you'd recommend, bro. To be honest with you, listen. Thank you for the kind words. The further you get into ICT, the more you realize that it really just everything, every concept is good. I'm gonna go ahead and just turn on my executions for you guys. I'm gonna screenshot this. Um, to be honest, bro, there's no one concept. There's no one concept. Um, so I'm just uploading to the Discord. Um, there's no one singular concept that's just like better than others. It really depends on the narrative and context. I will literally take a trade because like the way I trade within a framework, right? So that framework gives me the flexibility to take trades throughout anything and everything, or that allows me to take trades utilizing any PD arrays. So if if the direction makes sense, I will take a trade off of a fair value gap, off of an order block, breaker block, suspension block, volume imbalance, mitigation block, turtle soup, new week opening gap, new day opening gap, first presented fair value gap, quadrant level of an opening range gap. I will take entries off of literally anything, but the narrative needs to make sense. That's the most important part. So if I had to give you my top 3 things that are the most important, it's narrative, context, and higher time frame premise. Which ICT models do you recommend to watch and learn? Bro, I recommend to watch all of them, bro. But if you're starting out, I recommend watching. If you're brand new, if you are brand new, I actually recommend you go into the 2026 first. It's going to be a lot. And it's going to be so much shit that you have that you've never learned of, but it's going to give you proof of concept, and it's going to show you exactly how ICT interprets price action over live price. He's doing everything day to day live. So this price action he's probably going to do a recap of. What time frame do you see the relative equal lows? These relative equal lows right down here, really really nice. Relative equal lows down here, and we have some relative equal lows down here, and then we got some relative equal lows down here, which is pretty nice. Um, So if this is FOMC minutes is not the news that ICT talked about, then Tuesday and Wednesday New York AM session can be traded by following our rules. And if listen, man, yes and no. Because remember, like I said earlier in the stream, you're never ever ever gonna know for certain what days are tradable compared to others. Like you're never ever gonna know 100% with certainty like if a trading day is gonna be valid. The way I look at it, like for instance, tomorrow it's going to be another no news day. So I'll definitely be looking to trade pre market, but it's a no news day, so you can't expect much, right? Same thing. Wednesday, we have high impact news in the afternoon. Even though it's not FOMC rate announcement like ICT talks about, it's FOMC meeting minutes and it's a high impact news event, meaning that there's probably going to be lackluster volatility in the morning session, right? So it's not that you can't trade, it's just that those days are less likely to deliver in our favor. Really nice trade. Thank you. If you blow your funded, lose 2,000. Really, you only lose 100. Comprehending that could help mentally, not crashing out. Yeah, 100%, bro. 100%. I guess like the part that sucks though is that like a lot of people like listen. I don't want to sit here and act like I never put myself in shitty positions and put myself in the hole. Like I put myself in the hole many times when trying to make this stuff work, and I would get really close to a payout, and then I would blow my accounts, and then that was like my last $100, and then there we go. That's kind of what I was left at. Do you think there are better macros than others? To be completely honest with you, I don't really know because ICT definitely has some work in regards to it. I know that all macros are important, but he does mention that certain macros are more vicious than others. Do you think there took partials and leaving run on for age low, hopefully? Yeah, I mean, listen, I think we get all the way down to the new week opening gap, to be completely honest with you. But you're definitely going to need some more volatility here. And you would definitely need 930 because I don't know if we can get there just yet. You might have to sit through a grinder. Thank you for the insight in W Trade Team. I'm joining the Discord. Thank you, brother. Thank you, thank you, thank you. Um, I start trading. Well, I try to start trading pre-market at 7 a.m. That's like most optimal for me. 7 a.m. is like the best. But it really depends on when I wake up. I can honestly see myself, accidentally waking up at like 7:30 and then I'm not on till like 8 or whatever. But like today, I woke up at 6:30 a.m. Eastern Standard Time and just hopped on. So, expect like 7 a.m. usually. I'm not sure how often I'm going to be streaming. Maybe I'll stream tomorrow. We'll see. But is it worth knowing macros? Because I have an idea. I have no idea. Yeah, 100%. You definitely need to know about macros. Macros are they're like the breathwork of the marketplace. Price will always begin to move during macro times and spooling to your targets. Like it's just like a great way to align like price and time. So like some people always ask like, hey, like when do I know is the right time to be taking a trade, or like when do I know this PDRA is going to deliver? If there's a time that it's going to deliver, it should be during the macro. And if it doesn't, you just have a wrong idea. But if it does, then the reason why was because during the macro. Like you see how we had this super thin price run during this 20-minute interval? Always happens. Um, how do you connect the sessions with the narrative to know that pre-market will run? So like for instance, um, heading into today, like I said, it's going to be it's a Monday, so and it's no news, so we're expecting lower probability in the New York AM. Anytime that you're expecting lower probability in the New York AM, pre-market usually offers some decent little runs that are just quick. Like these are the type of runs I like to get on side with, right? These like really one-sided runs that just move. Those are beautiful. Those are amazing. Those are perfect. The idea was that price swept out the relative equal highs. Now, granted, you would have to be on the charts to really see this happen, but the moment we swept out relative equal highs, we swept out previous week highs, right? We have that buy side imbalance, sell side efficiency lower. We have the new week opening gap lower. We have a bunch of sell side targets lower. That right there is more than enough to give you context to say, okay, the narrative could be lower prices. And then you just wait for certain triggers to occur, certain signatures to occur. And of course, those signatures for me, we swept out this high right here. Price ended up peeling lower. Inversion fair value gap. We failed to take out that high. That right there is indicative of weakness. And also, this is like a really hard range to get past, to get through. And there's really no other reason for us to keep working higher. We have no draws. We have no setup. So price trades lower. And then, of course, we end up peeling lower. So we're utilizing that new week opening gap as our draw on liquidity, but price ends up, taking out these lows. This is our low hanging fruit. How many months would you recommend to tape read while taking imaginary demo trades profitably before getting funded? Ooh, this is a really good question because I actually recommend that you sit on paper trading for 6 months. Like if like let's just assume that you're like completely brand new. If you're completely brand new, I recommend you sit on demo for 6 months because a lot of people want so bad to get straight to the funded stage, but then what ends up happening, right? They go straight to the funded stage after like 2 months of learning, and then they end up sitting there blowing account after account after account. Listen, if you have the money to do so, then go, then by all means do it. But Most people don't, and most people put themselves in shitty positions. If you're someone who's tight on money, or you just know that you don't have like thousands to spend on evals, then what I would recommend is you sit on you sit on demo for like 6 months, get enough data so you feel comfortable, so that once you move to funded, like you should be able to move to funded, and it's easy. Like that, it should be easy. Passing accounts are easy. Getting one payout is easy. I think the only thing left to look out for today, a day meant for nothing really, is the ATM model. Yeah, no ATM, then no trade. Yeah, today was definitely be an ATM type day. I got stopped at 7:04. I think that 6:41 was the IFG to do the run, but I got smoked. It's all good, bro. It's all good. I'll sit on here for. I'll sit on here till like 8:30 with you guys. See what else happens. I'm gonna go ahead and post the screen recording on my Instagram. So if you guys are following that, if you guys do follow me, go ahead, peep the Instagram. Um, Gotta get myself a nice little sound here. I'll make the choice. Hmm. Um, what are my targets for market open? I'm done for the day, so I don't have no targets. But if I had to assume, I would assume that price is probably going to go down to the new week opening gap. That would be my draw for the day if we have yet to reach that by the time we are at open. Just give me 1 second here. I should screen record it. Um, but yeah, I would anticipate the new week opening gap would be the next draw, and I am expecting higher prices on a higher time frame basis, but I can see us working lower. What app do I use for the screen recording? Oh, I use an app called Edits. It's pretty much just Instagram's form of CapCut. If you ever heard about it, it's real easy to use. I like it. To what? Why won't it? Hmm. Um, is opening range big? Yeah, the opening range gap plays a big role in my analysis. Definitely plays a big role, but for pre-market, obviously, there's no opening range gap, so I can't really do much with that. For some reason, this didn't record. Edits is like Edits is like the you know how like CapCut is correctly is directly connected to TikTok, right? So like when you edit something on CapCut, you can just import it straight to TikTok. That's what edits is like. Edits is literally that for Instagram. Oh shit, here we go. Okay, perfect. Just just edited the video and I'm letting that shit load up. Gonna go ahead and wait for that. Sorry. I'll answer some questions here. Um, why did I trade before the market opened? Well, it's just something that I've been collecting personal data on. Like as of recently, the pre-market session has just been something super easy for me to read. So I'm really testing my advanced ICT knowledge with the pre-market session to see how well I can read price action. And so far, it's been going well. I have been trading it like on my, at my own leisure, by myself, but I haven't really done it on stream or like in front of you guys, or haven't really talked about it or taught it. But I definitely think it's a pretty valid session. I love trading the pre-market session. It's really really nice. And the way I frame whether or not a pre-market session is going to be valid or not, all pre-market sessions should be decent, but ICT teaches that the best pre-market sessions are going to be on the days where the New York AM open, so the regular trading hours open, is likely to be shit. Like today, no news Monday, it's probably going to be shit. I wouldn't be surprised if it's shit. So, yeah, it does look like IG. Strange question, but what's like your sleep routine, dude? Honestly, actually, hold on, wait. Before I answer that question, I saw say we gap higher today. Would you still like the new week opening gaps to draw, having to fill the opening range gap? Yeah, yeah, 100%. I like think about it because the new week opening gap, it's a pretty significant draw. A lot of people like to hype it up. The idea is like this. It's like assuming that we're bullish on the weekly chart, you would want to see, of course, open low, high close, meaning that we should work lower first, put in the low of week, and then work higher. And of course, we would do that by the means of trading lower to some type of level, find support at some type of level, and then trade higher for the rest of the week. And that level ideally would be the new week opening gap. Now we could just be extremely strong and just keep working higher, but that's why I recommend like on a day like today, especially if it's Monday, right, and it being like shit, or it to be likely shit, I would recommend just targeting low hanging fruit objectives along the way. So like, you know, maybe like look for this low or like this low at the very most. That would be fine. um, But yeah, my sleep schedule. So obviously I'm on Eastern Standard Time. I'm not sure where you guys are at, but I usually try to be asleep by 11 is the best. 12 if I can. 12 if I absolutely need to. Which obviously, if I go to sleep at 12, doesn't really leave me for much room for sleep. So like I'll wake up at like 6:30 today. Um, but on a day where I can get to sleep at like 11, maybe even earlier, of course, that gives me 7.5 to 8 hours of sleep, which is perfect. So that's like what my sleep routine's looking like right now. Do we think we are going to work higher from here or we go down? I have no idea. I'm completely removed of risk. I would, if I like gun to my head, I would say that we go to the new week opening gap, but that doesn't mean price can't go higher first before it goes lower. From when to when is the pre-market session? From 7 a.m. to 9:30 a.m. Well, really, 7 a.m. to 9 a.m. and that 30-minute interval between the open and that pre-market session and that 9 a.m. hour is sort of like its own time, but you can still include it into the pre-market session. We start to learn ICT. How should we go about the playlist step by step? This is exactly how I do it, right? If you are listening or you want to record this, like go ahead and jot this down. I think the best way to do it is you go. I think the best way to do it is Market Maker Primer, Scout Sniper Series, 2016, 2017, 2022, 2023, 2024, 2025, 2026. That's the best way to do it, in my opinion. False bull and bear flags. Yeah, yeah, yeah. So it's really, really simple, right? Take a look at this. Okay, I'll give you a really good example of like what a false like bear flag could be. So notice how on our okay, this is like a real good example of a false bear flag. So obviously a false bear flag looks something like what? Looks something like this. Right? This would be our false this would be a bear flag. Okay, retail would look at this bear flag as a means to what? To go short. The way that they would go short is they would wait for price to like tap the high and then roll lower. So what ends up happening, right? What a false bear trap is, or a false bear flag is it something like this. You see prices working lower pretty aggressively, and then we start stalling out. This right here creates the pull to the flag. This creates the flag. Retail would want to see what? Retail would want to see us reject from this area of price action. And you can see we kind of get an example of that right here. So retail is going short as much as possible. They're putting their stop loss right above here. And then take a look at what price does. Price aggressively spools higher against all of those people that were trying to go short. And that's exactly what a false bear trap is. And then a false bull flag is the complete opposite. Um, how do you come on the charts and say decide what your bias is? Like I said, bro, it really depends on the higher time. Like that's a hard question to answer because it's really open ended. Like there's so many ways that I can answer it. Simply, the best way to explain how I look at price action and how I determine my bias is just by ooh, look at that drop right there. Look at that. You're short. Congratulations. But if I had to explain how I'm looking for bias, I'm really just getting an idea of what the next day is likely to do next. And the way I like to explain looking at the daily chart is I recommend people to look at the daily chart like it's a 1 minute chart. If you can do that, then you're golden. If you can do that, you're fucking golden. Right here. Iran has decided to shift its policy from defensive to full offensive. Wow. Okay. Do you recommend backtesting while learning to get into this? 100%. I think backtesting is a great way to get an idea of what your model looks like. I don't think that you should place a lot of emphasis on backtesting though, because backtesting in itself is not really. I don't want to say that it's not good, but it's really just meant for like the mechanical aspect of whatever your model is. So if you get too used to seeing the mechanical aspect of your model, you become a mechanical type trader, which we all know as ICT traders, that is not what you want to be. You do not want to be a mechanical trader. just want to see where we stopped. Yeah, we stopped right at the event horizon, right? When do I expect to see false flags? I mean, I don't really expect them. I don't really anticipate them, but like this right here was a false flag, right? We create the poll, we accumulate. This looks like a bull flag, and then it ends up aggressively running against it. Typically happens. No, I won't trade after 9:30 a.m. today. I already got my winning day in, so I am good. Mm. Like I said I'll be on here till about 8:30. Do you recommend learning ICT 2022 in core content, or is 2026 enough? Um, no, definitely learn 2022 model. Definitely learn the 2022. Definitely learn core content. 2026 is definitely not enough. It just gives you a good gives you a good spot to start. Um, guys, make sure if you're looking to get accounts, go ahead, run up Apex. I mean, in my opinion, listen, I'm affiliated with a couple firms right now. I'm affiliated with Apex. I'm affiliated with Funded Futures Family. I'm affiliated with Go Funded Futures, with Alpha Futures, and I can tell you straight up, 100% without a doubt, that Apex is 100% the one of the better firms. And listen, if you are brand new, this is why. This is literally the only reason why I'd recommend anyone to trade with Apex. They are the only firm that allows you to buy a fucking evaluation for $40, for $20. You can buy an evaluation for as low as $20. When you're starting out, you know how good that is for you, and especially now that they have the end of day trailing drawdown accounts, you know how good that is. How much money I blew, thousands I blew before I even made a single dollar because I was so hooked on spending hundreds and hundreds and hundreds off of on evaluations. Apex makes it so fucking easy. Literally, you can get an account right now for no joke, $40. And and then once, no, they do not. They do not pay you in 2 weeks. I promise you, they don't pay you in 2 weeks. They pay, at least now with their new system, they pay you out in literally a minute. Like not even, maybe like 30 seconds. At least with their new system. The same exact system that Lucid and Tradeify has to approve payouts is the same exact system that Apex has. And they have like a fully like autonomous system. So like they don't go through like peer review. It gets approved immediately. Maybe back then, yeah, 100%. Back then it took a little bit longer, but now they pay you out literally right away. Um, but either way though, like especially if you're a brand new trader, like I genuinely believe. Oh, for international traders. Okay, sorry. Take it back. I didn't know. I didn't know that you were an international. Got it. That makes sense. Still though, I mean, regardless, like if you are like, listen, if you're already getting payouts and you already know what you're doing, then by all means trade with whoever you want, right? Trade with whoever you want. I personally trade with Apex, with Lucid, and with Tradeify. Those are like my main three. And now I've been trading with Funded Futures Family because they're really fucking good. Their rules are fucking amazing. It's basically Lucid, just right now on steroids because the prices are better. Um, there's also this new firm that's coming up. It's Level Up Futures. Definitely gonna make a video about that because they got some interesting stuff. But yeah, Apex, Lucid, Tradeify. Those are like my top three. And I would just recommend Apex to anyone who is brand new or starting out because it's like you should not by any means be spending hundreds and hundreds and hundreds on evaluations, right? Funded accounts that you don't even know you're going to get funded with, right? Like you should honestly just trade with Apex. There's no reason why you shouldn't be trading with anyone else. Once you figure out your system, your model, once you know what you're doing, then you can start risking, hundreds. And of course, I'm talking to the people that are struggling, right? Because I know, like, I know back when I was struggling, like, I barely had enough money to even pay for an evaluation. And I just wish that, back when I started as well, Apex didn't have the end of day trailing. So that's why I never really traded with them. But now they have the end of day trailing. So it's like, it's almost a no brainer. $40 for a fucking evaluation? Jeez. Um, Sorry, there's a lot of questions that I need to answer here. 926 would count as a data candle wick, but it's not really all that important. Do you recommend learning ICT? Yeah. Hey T, good morning. Did you watch the latest videos of ICT chain of custody? Yeah, of course, of course. I've definitely watched this chain of custody. Apex paid in Julia. I was with them in June. They approved immediately, but consent. Got it. Yeah. I mean, listen. I mean, at the end of the day, I don't really know how international stuff works, so I guess like that could be a deal breaker for you. But I still think that the low cost for evaluations is great, and especially like their 5 pack, bro. Like it's amazing. Good stuff, bro. Trading ICT intended. That's good shit, bro. Hey, for 2 years, I'm trading with 4 or 5 months, and they got one payout of $80. You got a payout of $80. What firm is paying you out $80? I feel sometimes that I'm wasting time, but then I think what else I want to do and try. I mean, I don't really know how to answer. I don't really know if you're asking a question, but just got here. Mind explaining your trade? Yeah, I'll explain it real quick for those of you who just joined. Um, so on the week, I'm bullish, meaning that Monday we would reasonably expect for prices to work lower because of a weekly power of three profile. So we would expect Monday or Tuesday or Wednesday to put in the low of the week. So we can expect for the first couple of days to work lower. So technically speaking, I am expecting lower prices. And we also have reason for that because we have the current new week opening gap lower. And as we know, new week opening gaps, they are areas of price action where there was zero trading inside of, meaning that they are going to be inefficiently delivered price ranges. If they are inefficiently delivered price ranges, price is going to march and march and march until it gets there. As we hopped on to the 7 a.m. time window, you can see right at 6:29, price spikes up and it takes out relative equal highs in the marketplace. Mind you, there are no other highs to the left right now in terms of current market structure. So these highs, it's more than enough for price to start working lower. Also, we swept out previous week high. Previous week high was right here. So we've already swept out previous week high. We've engineered relative equal highs up here and we swept out relative equal highs. We also have relative equal lows, relative equal lows, relative equal lows, relative equal lows down here, relative equal lows, and the new week opening gap lower. So we have tons of reasons to see price go lower. Then we displace lower here. We pretty much accumulate. But this is a difficult area of price to get through. And we have to monitor to see what we want to do. If we get through the high, then chances are we might be working higher to higher targets on the daily or 4 hour or 1 hour. But because we fail to reach this high and because we're only able to trade like 50% of this range, this means that we are significantly weak and price sweeps out this high and then we roll over. This right here, inversion fair value gap. I'm expecting for this to act as an inversion. I don't want to see any bodies laid inside of it. Shorts coming on right at the low of the inversion. Price expands. We get a break even right here. The idea is that price should not revisit anything higher now since we have cleared out these relative equal lows. We do stall out for a bit, but then the moment we approach the 950 to 1010 macro, we rebalance into this small sell side imbalance, buy side inefficiency, 850 to 850 to 910. That's what I meant. 850 to 910 approaches, and then we expand lower. Inversion fair value gap utilizes it as a trampoline to springboard us lower into the sell side, and now you can see we're pretty much working lower to this sell side and probably the new week opening gap as I had stated originally. Thank you for the stream, bro. Really great insight. Can you do this more often? 100%. I plan on doing this like at least like 3 times a week. That's what I want to do. Maybe even every day if it works out. Important question in regards to watching all of ICT's videos is a lot of videos and would take a long time, especially for anyone that is working full time. That's why I asked a 24. No, okay, yeah. So I mean, definitely listen, man. Just try to get through what you can, right? Don't try to get through everything. Um, but still definitely follow the protocol that I just mentioned, right? Start with 2016, 2017, or the market maker prime, and that's where I believe everyone should start. But if you already have like a base knowledge, then go 2026. That's fine. For me, is I waited. For me, is not I waited for 3 years for my first payout. I'm waiting 2 weeks for the money to hit my bank accounts. I take. Um. Yeah, I see what you mean. How did you get out of the hole of being down thousands of dollars in eval to getting your payout to pay off that eval debt, dude? That's a difficult spot to be in, bro. I hope. Listen, man. If you are someone who is in that position right now, if you're telling me that you're in that position right now, I promise, okay? If you just focus on the process, you focus on the system, you focus at what's at hand, trust me, it will get better. Okay? I know that the debt right now may feel like this thing that's just hanging over you and it sucks, but I promise things will get better. Okay? I promise things will get better. I was in that position. The only advice that I can give to you is like, listen, you're in the debt now. Okay? The debt's going to be there until you pay it off. So you just have to accept the fact that if you don't have the money right now to pay it off, that the debt's just going to sit there, which means that you have to do what? You have to focus on your process. Because you know that the only way that you're going to be able to pay it off is by focusing on your process and by making the money. But you're not going to be making the money if you don't focus on the process. Okay? If you're constantly worrying about the debt, then you're never going to be able to make the money. You're never going to be able to get out of the hole. So my biggest recommendation to you is to just make sure that you don't let that cloud your judgment and you just focus and you focus and you focus and you focus on the process. Are you using London range for 3 to 5 quadrant levels? No, I'm not. Hell yeah. What have you marked out the quadrants on? So I'm just measuring out the distance between this sell side liquidity pool and this sell side liquidity pool. It just gives me an idea of like two extended targets because you can see this is a significant swing low. This is a significant swing low as well, but these two are like the most significant and they're also really close to the new week opening gap. So that's kind of what I'm outlining. Chain of custody, for those of you who did learn about it. This is like a little addition to chain of custody. Yeah, Event Horizon. Yeah, yeah, Event Horizon. Definitely, I've definitely been focusing on the chain of custody more often now that ICT had taught in the 2026. What do 2025 and 2026 mentorships focus on? So, like, the way I like to view it is 2020 like 2016 is like your foundational shit. 2022 is where he really starts talking about entry models. 2023 is where he really opens the book to all the advanced stuff. 2024 is where he starts to piece it together. 2025 is like a further reinforcement of piecing everything together, and he introduces some new stuff to kind of help support. And then 2026 is like 2026 he's really opening up the books, right? It's like he's really making things complicated. So if like you are like a new trader, it's good to watch because he's doing it every day, live to live price action, but like it's definitely really complicated. Shouldn't the macro on the chart be 750 to 810? Oh shit, you're right. You're right, bro. Didn't even notice that. I probably looked so stupid on the video I posted too. Whatever. Let's see. Do you use Event Horizon? I will. So yes and no. It's a little bit harder to use because um you need to have a directional bias in mind, but um I'll utilize Event Horizon, yeah. Chain of custody, oh shit, that's a hard one to answer. Basically, just think about it like this. Okay, here's your focus. If you outline a higher time frame level, right, or levels that are significant in price action that are large enough, so opening range gaps, large new week and new day opening gaps, higher time frame BISI, SIBI, suspension blocks, whatever. The levels that are going to be important, the PD rays that are going to deliver are going to be the PD rays that form over top of quadrant and octant levels, right? So consequent encroachments, octant levels, quadrant levels. So for instance, I could have told you that this was going to be a pertinent level. Why? Because I'm marking this out as a significant range. You can utilize that range to get quadrants and octants. And the PD rays that form over top of those levels are going to be your levels that are going to be most important. That's as much as I'll go into. But how long is enough to pass eval? I mean, I passed them in like 2, 3 days. So sometimes I'll pass in a day. But yeah, guys, so that is going to be it for me. As you can see, there's the sell side tagged right there. Sell side's tagged. Next up would be the new week opening gap. All outlined on stream, of course. I will be doing this more often, like I said. Um, so I'm glad that everything played out the way it did. Like I had mentioned, guys. Um, I already explained the logic up here going short. I was utilizing this new week opening gap as our draw on liquidity, so I was already anticipating for that to be a pertinent level to work lower. So yeah, that's going to be it for me for today. Good luck trading for the rest of the day. If this new week opening gap gets tagged, I would honestly be void of price action because I'm not sure if anything else will be high quality. But yeah, so hopefully you guys enjoy. Um, Hopefully you guys enjoyed. Make sure to use code T. Use code T if you purchase some Apex accounts. But yeah, I will see you all in the next one. Peace out.